Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. So what I've said, last video and what I've been writing and my issues and stuff like that is just simply, I think in the last few weeks, the market has kind of put in the blocking and tackling work, so to speak, laying the foundation, I guess is a better way to put it, for an intermediate term advance. We've had, the market holding up despite a ton of bad news. We have a lot of horrible sentiment out there by many measures, not all. And we've seen some positive divergences in breadth and more stocks drawing lines in the sand and all that. What we really need to see now is buyers. Now, this week, I think, has been a constructive week. We've seen buyers. The market's put on a pretty good show. We didn't, but we almost got a pretty rare blast-off signal yesterday on Thursday. I'm recording this late Friday morning. And I have to say, if the S&P 500 does go up 1% today, that would be pretty rarefied air and would probably tell you the bull market is back on. Okay, we'll see if that happens. But beyond the blast off stuff, just in general, I think the setup is there. And from here, the game plan is very simple. If the buying pressures that, emerge the last 2 or 3 days, nothing tremendous, but a good start. If those continue, we get some intermediate term green lights. And importantly, we start to see some stocks actually move above resistance levels as opposed to just hit them and get killed a few days later. If we start seeing all that, then it's time to put, some money to work. Not to be fully invested. There's still going to be headwinds out there, the longer term trends, stuff like that. But it would certainly be a major step in the right direction. In Cabot Growth Investors model portfolio, we actually did do a little buying this week, although admittedly, a big part of that was because we had taken partial profits in a winter we had, and we had something like 3/4 in cash. So now we're down to 2/3 in cash. So we're still pretty defensive out there, but I'm not opposed to doing a little nibbling here. But in terms of major commitments, let's just, if you've been following along, we've been patient so far. Let's just give the market another few days, week or two. Let's see how it plays out and see if this rally, this up move that started this week is finally the real McCoy. Okay, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more about it at Investors Business Daily. You can learn more also at marketsmith.com. Get out my trusty pen here. So here's the Nasdaq. Again, nothing too new here, but it's just generally been, my big thing is just net. The index hasn't really gone down here since late January. Yet during that time, we've had a Fed rate hike. We've had expectations for further, now it's like, 7 or 8 hikes this year, whatever the expectation is, go up. We've obviously had Russia, Ukraine, and skyrocketing commodity prices and yada, yada, yada. And net, the market, whether it's the S&P or the Nasdaq or some of these other indexes, have been hanging in there. What we need to see really is for the index, a few indexes, to get above their 25-day line, which it has. Really, it has been above here for the first time. This is the Nasdaq since back here in February, and that was just for one day. So we'll see how it goes. And before that, it was the start of the year. So it's been a while. So back above the 25-day line. Now we need to see this 25-day line advance, which basically means you need to be higher than you were 25 trading days ago. So, 5-week high, basically. So if we can kind of stretch our legs here in the next week or two, that could be enough for an intermediate term green light. So far, so good. Looking at the S&P 500, pretty similar picture. Above the 25-day line, holding. Again, I'm recording this late Friday morning. I would say here, so we had these 3 days in a row of greater than 1% gains. That's good, and I've seen some studies out there, but it's not really a true. There's some duds in there. That happened a lot during the internet bubble bear market, and it turned out to be nothing. What you really want to see is 3 days in a row of 1.5% gains. That's a 3-day thrust. We did not get that. I will say if you get 4 days in a row of 1% gains, that's very rare. I think it's only happened like 3 or 4 times in the last 50 years. And all of them led to, 25, 30% gains a year later. We'll see if that plays out. That's just sort of a short-term thing. I always like to monitor those blast-off indicators, but more important is the primary thing. So let's see if this 25-day line can turn up. As I mentioned last week, I do think one thing that is worth noting, we'll see if it carries on, is the relative strength in the small and mid caps. So this is the IWM Russell 2000, and you can see it really did, it didn't have any slippage here from that January low. It really just held right in there. And now it's back above the 50-day line, okay? The 25-day line still isn't moving up, but obviously this is a lot closer to seeing that happen than some of the bigger cap indexes. And just, it's not a big, I wouldn't call it the biggest change in character of the world, but just you can see this was back here in February, March of 2021, which was pretty close to the what I would call the primary peak in like growth stocks last year. That's really when a lot of them peaked. That's when like ARK and some of those things topped out. And the relative performance line to the S&P, to big caps, the S&P 500, just pretty much slipped since then. Now you're seeing a little bit of a turn up. Again, I wouldn't say this last few weeks is the be all end all, but it's just a little bit of a character change since the market hit that January low. And if it continues, it could be a sign of, what could lead the next rally if it happens. Okay. S&P mid cap, same sort of thing here on the weekly chart, a little bit of a bump here. And also just, you don't need a complicated calculation. You can just see it's been holding up pretty well. It's back above the 50-day line before the big cap indexes. So there's some relative strength. So all in all, I would just say, we've put in the work here. The setup is there. Now we just need to see whether these 3 days, continue going forward. In terms of the growth funds, they're a little bit weaker. This is QQQJ. You can see this easily slip to a new low. But again, it's coming back strong above the 25-day line. So we're all kind of I wouldn't say they're all in the same position. IPO fund from Renaissance. The IWO is the Russell 2000 growth. You can see that's above the 50-day, like the regular IWM. So they're all kind of within, I don't know, a few days. I'll just say, just generally speaking, of if, I'm not saying, we go up 1% a day, it's going to take 5 days, but it's a few days. If the market can hold these gains, build on them next week, we could finally get an intermediate term green light for the first time really since the start of the year. Okay, so we'll see how that plays out. Just other things here too. Well, one other thing really I just want to point out. I mentioned this last week. It has bounced, but again, I just think you're starting to see a little bit of, they're just little breadcrumbs. That's all. They're just small changes in character. So you have like the IWM relative strength. Okay, that's interesting. And now you're seeing the XLP, which is defensive stocks, has sold off. It did bounce here, but you can just see it's starting to underperform the market. And if the market can do this, and even if this just goes sideways, that would be a good sign. I can't show it on MarketSmith, but our aggression index, which is basically just the Nasdaq compared to the XLP, relative performance, consumer staples, is testing its 50-day line here from below. First time it's tested the 50-day line all year. So again, it's just a little bit of maybe something changing here and going on. So overall, I still think you can do some buying. But I think in terms of the big buying, if you've waited this long, might as well wait a few more days, right? The one thing I would say, so it doesn't sound, I don't want to be too positive, because we're 2/3 in cash. I don't want to sound like everything's great. One thing I would say is we've put in the work here, like I said, to build this bottom, and now we have this nice looking rally. I don't offer predictions, but my guess is if this fails, if we come up here and by the time we close today on Friday, or we come in Monday and the market's down, the Nasdaq's down 450 points and just collapsing, I would guess that these lows won't hold. So it's kind of like, it's probably a little bit of do or die time for the market. I do like the setup. I think there's certainly more positive evidence now than there were a few weeks ago, no question about it. But you kind of want to see it to believe it in terms of in a big way. This week, the other big thing was we saw some commodity stocks finally shake out, especially on Monday. And I do think it can continue. However, to this point, and this is, it can change, but I really just think they look like normal shakeouts. This is Nutrien, NTR. It's one of the big fertilizer makers. It's not like it just got going. It's been sort of crawled up here, had this sort of base on a base, if that's your thing, for the last 6 months. And then it just went vertical on the Russia, wheat, all that stuff. And you can see it's really, it didn't double, but it went up, 50% in a few days. So far, this is kind of classic shakeout. It went from 102 to 90 in 2 days, pop right back. Now it's sliding in there. It wouldn't surprise me if nothing would surprise me if it totally collapsed. But another week of sort of down and, some good news out in Russia and these things pull back. So far, so good. Maybe let the 25-day line catch up. But some of these fertilizer makers, I'm sort of impressed that they've held up so well so far. CF kind of in the same boat here. NTR looks a little bit better. NTR is Canadian, so do with that what you want. But again, you kind of have this super sharp 15% 2-day shakeout. And then interestingly, when commodities got hit this week, it was a little bit of a higher low. I wouldn't read too much into that. I would just say big picture, stepping back. These things are holding up well. And the longer they can hold up when the commodities are sort of correcting, the better the chance that they will have another leg higher. Oil stocks, same sort of thing. Devon Energy, it did. So this has been a leader the whole time. Let me just say this. So the breakout here really came back in September. So it's not early intermediate term wise, but it's just been respecting the 50-day line. And of course, it got very obvious. We talked about this. And 60 was a little bit of a shelf. So then it comes in here, but you like to see this really strong snapback. It doesn't guarantee that it's fine, but it certainly is a lot better than if this thing couldn't bounce at all for a week or two. So these strong snapbacks is pretty good. We'll see what happens. Again, I think, clear up this messy chart here. I'm making it messy. I do think you could have another week, 2, 3, something like that, where these things could easily rest. I mean, they totally deserve it. But overall, I think we're seeing some, decent snapbacks, which bodes well overall. Pioneer Natural, PXD, same sort of thing. Hit the 50-day line, a little bit of a cleaner chart, and then bounced right back to its old high. And just a little smaller one is PDC Energy. They're buying back 20-something% of their stock over the next year and a half, something like that. So I don't know exactly what yesterday's gap was, but you can just see it kind of had this nice breakout, held the breakout level, held the 25-day line, and really it's almost at new closing highs, just a point or two away. So I do think so far, I think near term, what I would say is there's probably a little bit of a cap in there for some of these stocks. But to this point, it certainly doesn't seem like they want to fall apart either. Take it day to day. You can never trust these commodity stocks as far as you can throw them, but so far, so good. And the last things I'd mention on that front would be the steel name. So Nucor, we've mentioned this before. It kind of had this big consolidation in here, and then it had this is a weekly chart, had this wicked shakeout in, that was January. And then you're going to see it just really an impressive snapback all the way to new highs, up 6 weeks in a row. Earnings estimates are down, but they're coming up and they're making a ton of money. Anyway, it is kind of a neat little, I wouldn't say tight, but nice consolidation in here between, high 120s and 140 for the most part type thing. So let's see if it can bust out on the upside. And its peer actually already did. Steel Dynamics, STLD. They pre-announced a really good Q4, and it wasn't quite as strong as Nucor, a little bit sloppier, but you can see it's followed through nicely yesterday on Thursday to new highs. So I still think, generally speaking, the long story short, commodities I still like. I do think near term there's probably still going to be some whippy movement. And I still think there's a chance, maybe they've topped out for a while. But so far I can't really say there's any sort of, this isn't November, December with growth stocks when these things are down 30 or 40% within, 3 weeks. And you're like, what the hell? These are still holding up so far, so good, okay? On the growth side of things, I got a bunch of charts to run on. In terms of off-the-bottom names, because I know a lot of people like that sort of thing. So Bill.com, we've mentioned it before. Is it a perfect base? No, it corrected 60% or something like that. But nice higher low in here. And what you'd like to see is when the pressure comes off the market, which ones are kind of popping. Obviously, if something's down 90%, it pops. That's not as meaningful. But you got a little bit of a higher low in here. And now Bill has just raced back higher. Still below the 200-day line. Wouldn't say it's ready, but just something I'm kind of keeping on the back burner just to notice. Cloudflare is another one. NET. Again, the thing is down from 220 to 76. These type of corrections take time to play out, but it did, again, kind of hold those lows here during these corrections and is snapping back. So I'm just kind of keeping a distant eye on some of these. Some of them might stop right here and die, but a couple of them might bounce back. Tesla, which actually really it didn't have that sort of 60% correction. It certainly got hit pretty hard, but in fact, I'll tell you, let's see, 42% from high to low, which is, sharp, but not crazy, and still been hanging around the 200-day line. And again, it is participating in this bounce pretty well, and it's almost back above the 50-day line. Tesla, again, these things that have had, it's up approximately 1 billion% here in the last couple of years. Not my favorite ideas, but a couple of them, usually 2 out of 10 or something, will come back and participate in the next uptrend and lead. So we'll see how it is. A couple more, just Nvidia, same sort of thing. Chip stocks are hanging in there, and you can see it got hit, but just kind of held those lows on the weekly chart. And again, this week, having a real nice week. And then I mentioned CrowdStrike last week, CRWD. You just saw after a 50% decline or whatever it was, support in here with some volume. Support in here. This is when Russia invaded on some volume. It then reversed, but then when it came back down, support on earnings, which was the biggest weekly volume in a year and a half, and now it's kind of followed through. I don't want to say followed through, but I mean it's sort of teasing some resistance here in the low 200s. Again, you're still below the 200-day line. It's not really in an overall uptrend, but at least they're putting up a fight. Okay, so those are some of the ones that are down, and then looking at ones that are more traditional, I guess I would say. This is Lantheus. It's a little smaller, LNTH, smaller, thinner, that sort of thing. Diagnostic agents. But you're going to see it really mushroomed. It's had this big, long consolidation. It's not overly owned, 400 funds, which is okay. But really a kind of a coming out party here on massive volume a month ago. And despite the market's ups and downs, it's had no ability to really pull back. And it's starting, I wouldn't say it's through the moon here with the market, but a good couple of days this week, certainly having a pretty good week. So that's one to watch. I'm still optimistic on Arista Networks. To me, it's just sort of a proper pattern. I mean, if you looked at this chart, you wouldn't know the market has had or at least growth stocks have had sort of a crash. Held the 200-day line a couple of times. A lot of closes in here right around the 120 area, which I find interesting. And now it's starting to probe here. I don't know where it is this morning. Yeah, it's probing above the 50-day line here the last couple of days. It's got work to do like everything else, but so far so good. Palo Alto Networks, I mentioned, PANW. My worry here is it's kind of a lone ranger. I guess Crowdstrike's acting better, so you could say it's not. But this is the only one in the group that's really near its highs. Everything else is way, way down. But nevertheless, I mean, just going with what I see, this is kind of a second stage base, if that's what you want to call it. Higher high, higher lows. It's starting to perk up again here with the market. That looks good. And then a couple other chip names. On Semiconductor, I think they're pretty big in the auto and stuff. I can't say it's a long-term growth story, but it has held up well. Kind of like Arista Networks. It's not something that you're looking at just saying like, man, this thing's going to double tomorrow. But you just look at it and you're like, yeah, it got hit, but it looks fine. Held the 200-day line. Institutions clearly weren't eager to get rid of it, despite all the correction and chip stocks and rotation, growth stock correction. And now it's starting to perk up again. And then GFS is very interesting to me. This is Global Foundries. It's a new issue. I mean, a foundry isn't, like Taiwan Semi. It's not like a traditional long-term growth area. But these guys, and they are expanding capacity, and you read that and you're like, oh, here we go. That's capacity is tight now. Then they all expand, and then prices collapse. But they're only doing it with long-term contracts. I think they have a deal with BMW, AMD. They sign these long-term things. They're really expanding a lot, and clearly something is up. I mean, you have this. Here's your January low. This was your invasion low, and then this was last week's low. So just higher. It's probably easier to see on the daily chart. Yeah. So you just have these higher lows in place. And then again, as soon as the pressure comes off the market, not only is it up, it's up on big volume. It's testing new highs. We'll see what happens. Some of these things, again, they've been testing resistance, and in this environment, boom. So these things you got to give loose leashes to. They can move around a few points, but certainly the action is quite bullish. So my guess is if the market, going back to the market as a whole, if the market is turning healthy, at least for the intermediate term, our game plan obviously is to turn more, constructive on the market, do some buying, probably start slow. We're still below the 200-day line in a lot of these names. I hope the market does this. I would just say the odds are against that, so we'll see how it plays out. But, overall, I think it's not just that we've had 3 or 4 good days. It's that we've put in the work here. The market's put in the work the last 6 or 7 weeks to kind of etch a bottom. And now I just say we have a shot at a pretty good intermediate term advance. Whether that turns into a, let's say it does happen, whether that's a 4 or 6 week advance or the start of a new bull phase or something in between, who knows? We'll see how it plays out. But so far, so good. So I think this is a good weekend. If you haven't already, get your watch list together. Have your stocks ready, whether it's commodities, growth, off the bottom. You can segment it a few different ways, but I think now's the time just to be ready, because if we do get a green light next week, not that it's going to be a cannonball into the pool, but you want to be putting money to work and stay on the right side of the evidence. Okay? All right, that's all the time I have. Thanks, as always, for listening, and be sure to come by again next week for another Cabot Weekly Review.